We've got 4 tips to help you lower your APR. So today, we're going to continue cracking the code on financial terms to demystify them and put the power back in your hands. We want to arm you with tools to make smarter decisions and help you make more money. Up next, APR, which is not to be confused with APY, and we've got 4 tips to help you lower your APR. APR stands for annual percentage rate. Simply put, it is the total annual cost of a loan. Most people think that a loan simply consists of interest rates, but they're not taking into account the fact that loans also may have origination fees or points or other factors or costs included that make the cost of the loan higher. APR basically is a way to compare the total cost, the total annual cost of that borrowing across different lenders, and to give you a snapshot of how much you will pay annually on that loan. It's also required by law to protect consumers so that we know the annual cost of credit. So if you are taking out a mortgage loan, a regular loan, or a credit card and get a high APR, what can you do about it? Well, we've got 2 short-term and 2 long-term solutions to help you. The first short-term solution is to shop around. APR is a great comparison tool, and different lenders consider different factors when determining the rates that they're going to give you and the cost of your loan. You may also want to consider credit unions or membership programs or other affiliates that might have negotiated discounts on behalf of their members, because that also might be a better way to get a lower APR in addition to having a strong credit profile. Short-term solution number 2, refinance. If interest rates have fallen since you first took out a loan, say like on a mortgage, it may be in your best interest to shop around to consider taking a different loan to pay off that original loan. Obviously one with more favorable terms with a lower interest rate and a lower cost. You'll have to get approved and go through another origination process, but it might be worth it and could save you a lot of money over the life of a loan. The next is a long-term solution, and it's to improve your credit score. Simply put, people with better credit scores receive better terms on their loans. We also have tons of videos on our channel that can help you here. Finally, the last long-term solution is to negotiate with your creditors after establishing a payment history. This also could be impacted if your credit scores have improved since you first took out the loan. Some lenders proactively review this, but it may benefit you to continue checking in with your lender and asking for periodic account reviews that may help the lender see your case for a lower APR based on either your credit or payment history. Remember, we're all about keeping cash in your account versus it going out. So hope these tips help you master APR.